tonight. Ooh, buddy, this is going to be fun. I'll tell you right now, the stock market has really done some interesting things lately, and this is very interesting to me. I wrote my dissertation on the stock market in case anybody is interested in that little factoid. You can read it. It's all about stuff like this, right? It's all about what happens when markets crash and how to respond to things like this and where the money's at, right? So my goal is to put more money in your pocket, and I have some ideas. I have some ideas that I think are going to help you. And it's up to you to decide how you want to respond, whether you want to listen to it or not. But let me just tell you, so today we literally saw a massive $3.5 trillion wipeout in economic value over the course of just a few days. I want to say about a week or so since the tariff talk kind of started. There were some missed opportunities in there, scenarios where maybe money could have been made with a little more preparation. We talk about that though. I've always talked to you guys regularly about the fact that dark markets are going to come. Dark days are always coming. This is not an if, this is a when. And now you got a dark market. Some people have described it as a self-inflicted wound. It's something that did not have to happen. It's something that is directly related to the tariff policy, not just so much the tariff policy, but the uncertainty around the tariff policy, as well as the pending trade war that they believe can come from this tariff policy. So there's a lot of conjoining factors kind of popping off together at once that some believe are capable of most likely pulling us into some kind of a recession. Recessions are not the end of the world, though. That's the thing. Like, I mean, I'm not saying that it's not a bad thing. I'm not saying it's not an issue or a concern, but a lot of times media tends to make things worse because they want to remind you constantly of how bad things are and how much you're struggling instead of looking at opportunities that are out there. And one of the things that I talk to the students about all the time is that there's opportunities everywhere. There's ways to make money everywhere. There's ways to not just protect yourself from the problems, but there's ways to actually make money in situations where other people see nothing but problems. So I hope you guys get that. Give me a yes if you understand that there's opportunity all the time. There's opportunity everywhere. Give me a yes in the chat if you believe me when I say that, because I really want you to come into this with the right mindset. Now, what I want to do really quickly is ask you guys, can you hear me? Give me a quick yes and let me know you can hear me. Also, this podcast is on Spotify, so you can look up my name on Spotify and find me there. Can you guys hear me okay? Give me a quick yes in the chat if you can. Also, tomorrow I'm not going to be able to make our morning class. We do money in the morning every morning, and I cannot make tomorrow because I have to go give a speech at St. Stephen's Church in Louisville, Kentucky. So if you're in the area, you're welcome to come in. And I hate missing class. I just hate it. That's why I don't like to travel. But because I have so much respect for St. Stephen's, I have so much respect for Pastor Kevin Cosby, so much respect for my home city of Louisville. Go Cards. I got to do this. I wanted to do this for my boy. So, but I will make it up to you because you guys are important to me, and I want to make sure you that we're connecting. So anyway, so let's get cracking on this stock market thing. I'm not even going to ask you if you lost money or not. I'm going to assume most of you did. Or better yet, instead of losing money, you saw paper losses. You saw a decline in the value of your asset. That's not quite the same as losing money. That I just want to start right there. A paper loss is not the same as a realized loss. A paper loss means that you own the same amount of stock that you had before. If you didn't sell, the difference is that stock is worth less than what it was before. So it hits you with something that is referred to in economics as a wealth effect. And the wealth effect sucks. The wealth effect is like, ah, man, it used to be worth this much. Now it's only worth that much. So now I'm feeling kind of sad because I feel like my money's a little bit shorter than it was before, which is going to affect your behavior. It's going to affect your sentiment. And it's really this sort of shift in sentiment, this decline in investor enthusiasm and also consumer enthusiasm that really is the biggest threat. They had that whole statement a long time ago. I guess it was FDR who said, "We have nothing to fear but fear itself." That's right. You should be scared of fear because fear can destroy a stock market. Fear can crash an economy. Fear can ruin a good relationship. right? Literally, if you fall in love with somebody and suddenly you are fearful, you scared of getting your feelings hurt. Anybody ever seen that somebody who's so scared of something going wrong that they literally sabotage, they self-sabotage any good situation? He meets a good woman, he runs away. She meets a good man, she don't know what to do. She wants to go back to start dating thugs again, so because at least she's familiar with what it feels like to get beat up every day and mistreated. When a man treats her right, she don't know how to act. So fear can be a terrible thing in terms of investing, whether you're talking about investing your heart, investing your time, investing your energy, or investing your money. So fear is gripping this market right now. Let me give you some quick stats and data to really describe just how deep this market decline has become. So basically, number one, the S&P 500 is down about 14% from recent highs. That is not a bear market. That is not a bear market. A bear market is 20%. So if anybody says we're in a bear market, they're lying. This market could do a whole lot more growling before it becomes a full-grown bear. The Nasdaq is almost in a bear market. The Nasdaq is down 19%. 19 is really close to 20, so it could end up dipping further down into bear market territory, which would be a problem. And when I say down, I mean down from previous highs. The Dow Jones down by 11%, but the Dow's not really even a good measure of the whole stock market. It's just there because people started using it a long time ago, but it's a price weighted average, which doesn't even make any sense. I'm not going to explain to you why it makes no sense. Just trust me. When I was on the faculty of Syracuse, it was like we were like, why would anybody pay attention to the Dow? But it's almost like generational curses where you just do stuff because somebody else did it and you're just following the crowd. Goldman Sachs, companies like Goldman Sachs have dropped. Morgan Stanley, Nvidia dropped 15% this week. Apple has lost $200 billion in market cap, $200 billion in market cap. And I think there's something like Tesla. Check this out. So Elon Musk, whether he is truly serious about this Donald Trump stuff or not, Elon Musk he's lost the amount of value that Tesla shareholders have lost since Musk took over and started doing his Doge thing is equivalent to the value of Ford, GM, and Honda combined. So literally, if you added up the total market cap of Ford, GM, and Honda all together, you would literally at that point get the amount of value that Tesla shareholders have lost. So literally, the Tesla shareholders have been taken to a Diddy party with no Vaseline. They have been screwed beyond measure, and so he owes them big. That um there's a lot happening right now that Tesla shareholders really are have a right to be mad about, and they're steaming mad, they're piping mad. And if you are a Tesla believer, if you like Tesla, if you like Musk, and I will tell you, a lot of people still do. The truth be told is that even though the market has kind of been shot down, even though tech companies have been slaughtered, a lot of people believe that if you buy these tech companies now, that's an opportunity to make this money. Right now it feels like they're all dead and they've been shot to the ground and left, and buried alive. But this is actually when people start making the money. This is when people start actually positioning for the money. So really, what I want you to really do is I want you to start becoming a rich person by doing what rich people do, which is thinking like a rich person, reacting like a rich person. Rich people are not gonna just sit there and not make a move. This is when the buyers buy, and all the research shows that buying during dips is the way to go, but you have to do it in a structured way. You have to do it in a portfolio based way. And so, some assets that you may want to look into, I'm gonna literally just tell you in terms of stuff that you may want to consider adding to the portfolio. I'm not telling you what to do. I don't give investing advice ever. Pull out your ink pen, give me a yes if you're ready. I'm going to give you some ways that you can actually position yourself so that when this market decides to reverse, which it typically will, and I'm gonna give you all the research to tell you to show this to prove this point to you. I'm not saying that no anybody can predict the future. I taught a lot of students at Syracuse that went on to go to Wall Street, and they all tell you that they can predict what the market's going to do. They're all lying. They're all lying. Even though we teach them that, well, the research says you can't predict the behavior of an individual stock, they'll still go to Wall Street and tell you that they can predict the stock because people believe them, but they're lying. It's not true. You cannot predict individual stocks. But I'm gonna give you. I'll give you some strategies here. Let me know you're ready. All right, pull out your pen. All right, Cyril and Charlie and Kim, I see you. All right, so here we go. Number one, if you like the tech companies, well, this is your time to dip into those. Nvidia, Meta, AMD, Shopify, great companies. All of them got slaughtered, like left for dead. This is an opportunity to be a holder of a lot of great tech companies. Also, there are these things called leveraged ETFs. Leveraged ETFs are very high risk, high reward. So if you're a cowboy and you like to take chances and you like to just jump on the Bronco and ride that sucker all the way into the wind, well, a leveraged ETF like SPXL, that's Sierra, Poppy, Papa, Xylophone, Lion, SPXL, gives you three times the S&P 500, or TQQQ. TQQQ gives you three times the NASDAQ. So if you like your coffee with extra caffeine, or you want to drop a little bit of crack in it in your coffee, then this is going to give you a wild ride back up. And why do I think that this is okay? I'm not telling you what to do. This is not investing advice. I do not give investing advice ever. But most research says that when the market has a calamity like this, it's gonna come back, and it's gonna come back strong. It's gonna come back on fire. One of the things I can tell you is I don't care if you like Trump or dislike Trump, but at the end of the day, one thing he said that is probably true is he said the markets are gonna boom. And this is from the guy, the one of the few guys on the planet who has the ability to open his mouth and make the market boom. So whether you like him or not, yes, he's a bully. Yes, he's a narcissist. Yes, he's not a smart leader. These tariffs, the way he's doing it's a very bad idea. He wants everybody to kiss the ring 100%, but still he ain't stupid, and he knows something that we don't know, and he's got power that we don't have. He can open it, and this isn't been just true as president. Even before he became president, he could say things that could move the stock market. So he's saying this market's going to boom. I believe him. So ultimately, there's research out there by there's some names that I remember hearing in grad school. DeBont and Thaler. They said that in their studies in the 80s, they said markets tend to overreact to negative news, which leads to above average returns 6 to 12 months after. They call that mean reversion. Secondly, trade wars cause temporary but severe slowdown. So Amidi, Redding, and Weinstein, that's a hell of a name, right? I don't think it's the Weinstein. It's another Weinstein. They wrote a paper in 2019 at the National Bureau of Economic Research. Very smart people, where they said that U.S. tariffs and retaliatory tariffs lead to short-term inflation, reduce business investment because everybody's nervous, nobody knows what to do, and stock market underperformance. Stock market underperformance. So this is what you're going to have inflation, you're going to have reduced business investment, and you're going to have some stock market underperformance. But they tend to believe that this stuff is not long term. Here's another paper by Fama in French. I remember Eugene Fama. Basically, they found that historically, pay attention. I want y'all to remember this. Listen to this. Buying during downturns leads to superior 5-year returns, especially in value stocks and small cap stocks. Value stocks and small cap stocks. So what's a value stock? A value stock is basically a stock that's a good value, that appears to be a good value based on measures. They call it ratios. They call them things like book to market, price to earnings ratio. There are a lot of good values out there. There are a lot of good value stocks. And then also, if you're talking about small cap stocks, well, there's a Russell 2000 small cap index. I'll give you guys the ticker. I'm not telling you what to buy. I don't do that. I don't tell you what stocks to buy. So I want to make that clear. Although I do have what Dr. Boyce is buying. If you go to drboycestockmarket.com, you can take a look at that and join our stock market investors club if you want to. All right, so let's see. The Russell 2000 index, the ticker symbol is RUT, R-U-T, R-U-T. This one has taken a bath like everything else. Last 3 months is down by 19%. It's ripe for an explosion. It's ripe to go up once you see once some of this is over. Okay, so just not telling you what to do, but I can tell you that there's opportunities in this market. A lot of opportunities. Just as many opportunities pop up when the market goes down as there are when the market comes up. And since you are intelligent, conscious investors, you know that that this too shall pass, that today is not all that there is, and that there are that investing is something where you don't invest today for today, you invest today for tomorrow. So you're not thinking about what's going to happen next week, next month, or even next year. You're thinking about what's going to happen over the next 5 years. And all the studies show that over the next 5 years, that basically the rich people, the smart people, the smart money, the ones who are going to be rich, they're already making plans. They're already making plans. Now, some of you, do me a favor really quick. Could you please hit the thumbs up button, thumbs up, share, subscribe. And as you do that, give me 1 second. I'm going to go and shut my door. And also, if you want to get access to a list of my favorite AI stocks, just text the word stock to the number 87948. So text stock to 87948. While you do that on your phone, I'm going to go and shut this door. Hold on real quick. Okay, I'm back. I'm back. I'm actually traveling because I'm giving that speech tomorrow at St. Stephen's Church. So I'm here supporting my boy and supporting my hometown. You know, you got to rep the city, and I rep the Ville everywhere I go. All right, just like Muhammad Ali did. He was from Louisville too. All right, so here are some other things you can do if you're into options. This is a great time to look into call options. Call date long dated call options, bull call spreads, things like that. If you're not sure what all that is, feel free to join our options class. Go to drboyceprime.com, drboyceprime.com, and we do options all the time, every week. Also, the tech and AI sector, I think, is a great place to put money. So, if you like real estate, if the Fed starts reducing interest rates, there is a company I bought some stock in the company Rocket Companies. They do the Rocket mortgages. So if the Fed starts to reduce interest rates, which many people believe that they will, these rate cuts are typically done when they think that the economy is dipping into a recession. Then companies like Rocket Mortgage or whatever, and the ticker symbol I think is RKT. RKT. They're going to take off. They're going to explode. Now, at least that's what the conventional wisdom says. I'm not telling you this is what's going to happen for sure. I always have to, in case you wonder why I repeat myself with that, it's because I have to keep doing that because when someone doesn't understand the market, they think that when you have a doctorate, you can magically predict the future, and you can't. But I can tell you what the data says. I can tell you what the research says. So moving on, if you're a crypto fan, I think this is a time to jump into crypto too, because right now what's happened is that because the sentiment has changed, investors are not as interested in taking these heavy risks that might be involved in the purchase of crypto. So why not get some crypto as well? At the very least, this is not a great market to sell into. I didn't really sell hardly anything unless I absolutely had to. For the most part, selling during a time like this is crazy. It's like walking outside in the middle of a thunderstorm. You're going to get wet, and I don't really necessarily know if that's what you want to do. But again, show money, you can do whatever you'd like to do with that. Let's see what else in terms of what's going on here, in terms of storylines that I think are worth covering and talking about here. Just in case you want to know, I don't know if anybody knows this, but the total market cap of the S&P 500 is like $48 trillion dollars. They lost 3.5 trillion of that, but it's 48 trillion. So if you ever are trying to win like, trivia at a party or something, this might be something worth knowing. Let's see here. The other things you may want to know about this in terms of what the research says, there is a recession most likely coming. JP Morgan, I think increased their odds of a recession overnight from 40% to 60%. I believe it was JP Morgan. So they're now at a point where they believe there's a greater than 50-50 chance that we're going to have a recession. Here is something that's really important to know. And this, I'm going to cite some research studies on this so you can kind of be ahead of the curve on this. First thing is that typically stock market volatility, according to Bloom in 2009, they wrote a research paper in a really good academic journal called Econometrica. What they basically said was this. They said that spikes in market volatility typically precede drops in employment and industrial production. So what does that mean? That means that the stock market starts acting a fool right before you start having job losses and drops in production, indicators of a recession. Okay. So ultimately, the stock market behaving the way it's behaving right now predicts that even though the jobs numbers are good, and I'm sure Trump's bragging about that, they were good today. They're probably not going to be good in the future going forward. And so this means that that recession and all that stuff that they're talking about is likely on its way. But here's another research study worth paying attention to by two people named Reinhardt and Rogoff. And they said that after major financial or policy-driven crashes, this is going to be this would be a financial and policy driven crash. This crash was a self-inflicted wound. Trump caused this with the tariffs for sure. It takes GDP a long time to recover. So you're going to hit a recession most likely. GDP, two quarters of negative GDP growth, all that stuff. But equity markets bounce back faster than the stock market. What does that mean? That means that if you're a stockholder, you're going to piss off all your friends. If you're an investor, your friends are you're gonna have haters to the ceiling. And I'm gonna tell you, haters are a sign of success. Haters are a sign of success. I don't care how if you become great at anything good happens in your life, you're gonna have people around you that are mad at you because you're not as miserable as everybody else, because misery loves company. But let me tell you why you're gonna have haters. You're gonna have haters because what's gonna happen is that when the market recovers, most likely, it's probably gonna recover and boom and take off and start setting record highs again there's a good chance it's going to do that right in the middle of a recession. So all your friends that for whatever reason are scared of the stock market, they're scared of money, they don't like money, they run away from money as much as possible, then wonder why they don't have any. They're gonna be mad. They're gonna be sad. They're gonna sit around and they're gonna complain about how much they hate Trump and how hard it is out here and all the DEI programs is gone and the jobs is gone and I get all that. I respect all that for sure. But what you're gonna do is you're gonna be sitting back quiet. You're gonna be quiet because your stock portfolio will have gone up 10% that week, 20% that week. You're gonna see income when they're seeing outflow. You're gonna see opportunity where they see chaos. And that's because the stock market is a forward-looking indicator. The stock market looks into the future and says, what do I see on the horizon? I'm going to react as if the future is already here. So the recession is going to come to an end. All recessions end. They don't last forever. So what's going to happen is that the stock market, as soon as it sees indicators, forward-looking indicators that the recession is going to come to an end, the market's going to say, okay, everything's good now. Can you feel a brand new day? Can you feel a brand new day? And everybody wake up. That's what's going to happen. And the stock market's going to start pouring money into your account. And you're going to be doing better than the people around you because you're going to turn on the TV and you're going to see negative economic news. And at the same time, you're going to see stock market Dow hits a record high, S&P hits a record high, and you're going to see that regularly. And what's going to happen is there's going to be confusion for people who don't understand, who don't know what you know, and also maybe some jealousy, of course, but then also like this interesting insistence that the reason that the Wall Street people, the investors, the people like you are doing well is because somehow you rigged the system in your favor. You're one of the dirty rich people who is exploiting the poor and all, and you're not exploiting nobody. All you're doing is seeing which way the wind's blowing. All you're doing is doing what a smart economic thinker does. And that's what I really want for you. I want you to be in position and I want you to really see past this moment. If there's ever a moment to exercise financial consciousness, we do financial consciousness every morning. It's called economic elevation. I hope if you want to join us, drboyceelevate.com. The class is free. What if you really want to know why we learn economic elevation and financial consciousness, it's because of times right now. Like right now, this is the best time to be in your woosah. Because if you are stuck in the moment, if you are incarcerated by what happened today, if you are psychologically imprisoned by what happened today, then you're going to miss all the opportunities that are out there in front of you. When I looked at this market today, I said, "Ooh, look at this. I guess I better go talk to the students because there's probably going to be some people that are going to freak out about this." Um, but I didn't sit there and say, "Oh my God, I lost so much money today." I ain't lose nothing. I ain't lose nothing. I have several hundred shares of Meta stock. I checked my account. I have the same number of shares. I have the same ownership, Mr. Zuckerberg, that I had before. In fact, I added to my ownership. I have a lot of shares of Oklo, the nuclear power company. I checked my account. I still have the same number of shares that I had on Tuesday. So they didn't take shares out of my account. The paper value of those shares has changed due to recent economic conditions, but those numbers change literally every 30 seconds, damn near. So you have the same asset you had before. It's like if I buy a building and the value of the building drops for a year, who cares? If I'm collecting rent on that building and I'm a long-term owner of the building, it doesn't matter. Jeremy Siegel, I spoke on this for briefly earlier on my Instagram. My Instagram is Dr. Boyce Finance. Jeremy Siegel at the Wharton School, just this great old man that I really love. I love Jeremy Siegel. He's like this jolly old dude who just is super smart. And I remember reading his research papers back in the day. He's a badass. He's a badass researcher. But Jeremy Siegel said something that I really thought was accurate. They said, "So what are you gonna do um with your stocks?" And he said, "Well, if I'm a trader, then I'm gonna have a hard time because traders are not investors." He said, "But if I'm an investor, a long-term investor, then I don't care. I'm gonna just hold my stocks, buy some more, and just wait out the storm." That's literally what Jeremy Siegel said. So Jeremy Siegel, literally, it just, I mean, he said it plainly, and this is something I've said to you guys a million times. And so when someone says, so when you're talking about investing, here's the thing. So I see your question, Micah Kinney. Micah says, is it Micah Kinney? Is that how you pronounce it? Did I miss something, or how do you invest without losing? The way to invest without losing is to not invest at all. And the way you can avoid having a losing game is to never play. Is to sit on the sideline. If you sit on the sideline, you hold your dollar like this, it's gonna decay because of inflation. So you're losing value, but it's not going anywhere because you're not in the game. Um, but if you get in the game, then you're gonna have moments that are gonna feel like losses. And like this is the epitome of that. Today was just a rough day to watch for sure. But really sometimes ignorance can be bliss. My wife was has been a consistent investor. She has no interest in the stock market at all. When I get on with you guys and I start talking about the stock market, she falls asleep because she says my voice soothes her to sleep and she doesn't have any interest in stocks. But my wife has been a consistent stock market investor for many years and owns quite a few shares of stock. The best thing that could have ever happened to her is that she sleeps through the tornadoes, so to speak. She's not watching the Dow every single day. She's not looking at her portfolio once a week to see if she lost money or made money this week. She has one consistent strategy of putting a certain amount of money in the portfolio every week. And over time, as the market has gone up and up and up and up and up, it's going to be fine. She's thinking in terms of decades, not in terms of days, weeks, and months. So you don't want to think about the stock market. If you're an investor, now if you're a trader, that's different. Traders don't typically build much wealth. Day traders, 90% of day traders do not build long-term wealth. Just be clear. So when your friend tells you about this trading class or this Forex class or whatever it is they want you to do, just know that most of the people that do these sorts of moves, it becomes more like a casino. It's more like a gambling atmosphere than it is an investing atmosphere. But if you simply look at what people like my wife do, and there's millions of people like this, they don't react to every little market decline. If they react at all, they see everything go down. They say, "Oh, great, everything's on sale at the market." The same way I go to the grocery store, and if everything's 40% off, I'm gonna buy up as much food as I can. Well, now instead of buying food, I'm gonna buy stock. Instead of buying physical food, I'm gonna buy some financial food. I'm gonna go eat me some Nvidia. I'm gonna go and prepare a meal made out of AMD stock. I'm gonna make a souffle out of my Tesla stock, whatever it is, right? So at the end of the day, this is what works. This is the strategy, folks, and this is the time where you have to find your way to uh, find some mental clarity and ask yourself, what am I going to do? How am I going to respond to this? If you are selling while the market declines, this is going to be bad for you because what's going to happen is you're going to miss out on the party that's sure to occur after. And I suspect it could be sooner rather than later. I think that Trump is probably going to pull a magic trick. I don't think he would enjoy having a prolonged period of time where everyone's mad at him because the stock market declined. He had a lot of political capital when he got elected. Tariffs have always been very important to him because he always felt for the last 30 years or more that America's trading partners were ripping off the country. That's how he felt. He said, here's what he said. He said, and this is the thing, he said the same thing that a Dr. Claude Anderson might say about the black community. He said the same things that Malcolm X said. Remember when Malcolm and Dr. Claude and others and Marcus Garvey used to say that it's crazy that they expect you to buy their stuff, but they don't want to buy your stuff. They don't buy your stuff. Now, I'm not here to give blanket defenses of Trump, but that's not in my interest. But I can tell you that that is how a lot of countries operate when it comes to the United States. They say, okay, you're the suckers who like to consume. You're the suckers who will buy anything anybody sells to you. You're the suckers where we can set up shop in your neighborhoods, your community, your country, and sell you anything. But we're not doing that. We're going to protect our economy. So what he was basically saying, if you go back and listen to him on the Oprah Winfrey Show 30 years ago, early 90s, Trump said, it's crazy to me how anybody in Japan, any company in Japan, like they can dump their automobiles into our markets. They can sell anything they want in the United States. But when we try to sell over there, they don't want to buy our stuff. So I understand why he's feeling this way. What I don't agree with, though, is I don't agree with the execution. I think that if you're disrupting the global economic order on such a vast scale, you should probably not do it like a bull in a china shop. And that's the issue with Trump, in my view, is that he's kind of a sloppy guy that isn't thinking about how things flow and about the collateral damage of various economic policies. And that's what I see. All right, so I'm going to give you some more investments that I plan to make in a second. So do me a favor, please hit the thumbs up button, thumbs up, share, subscribe. And also, don't forget, if you go to drboycebooks.com, You can get all kinds of books. We have Dr. Claude Anderson's books there. You can get my book, The Ten Commandments of Black Economic Power, which is a number one bestseller on Amazon in the public finance category. It's the number one bestseller on Amazon in the public finance category. Also, you can get our financial workbooks and flashcards for kids. We're actually working on some financial flashcards for kids in the areas of stock options and crypto, things like that. We believe deeply that our children should learn wealth at an early age. I'm tired of seeing our kids struggle. I'm tired of seeing our men looking like punks because we get slapped around in this other man's economy. I'm tired of our people not having what we need due to preventable issues. We have a lot of preventable financial illnesses out here, a lot of struggle that could have been prevented with just a little bit of preparation. So we're all about preparation. In fact, we believe that every black child should own stock when they're born. Every black child should know how to start a business by the age of 12. Every black child should know the difference between being a renter and being an owner. Every black child should understand real estate. Every black child should know all the different ways to make money other than singing, dancing, rapping, playing basketball, thugging out, or entertaining other folks, or working for white people. I no disrespect to white people, but I just believe that we're better than that. I believe we have more in our DNA than that. And this is the kind of stuff that probably makes some people uncomfortable, but that's my job. My job is to make you uncomfortable because you done got too comfortable in your discomfort. You've gotten too comfortable in your mediocrity. You've gotten too comfortable losing. You have we've developed over time a losing culture. I don't want us to lose. I want us to win. That's what we do over here. We're winners over here. So if you want to be a winner and you want to fight to win, then welcome to the family. I love you too. Feel free to text the word money to the number 87948. Text money to 87948. And there's a training I did called How to Make Money Without Working. And you can actually do that in this economy. That is doable. So text the word money to the number 87948 and I'll send it to you. All right. So here is a couple. So let me give you a couple more studies and I'll tell you some more investing strategies you may want to consider. One other thing about one of the things driving this market decline is investor sentiment. Psychology is huge, and what Trump has been able to pull off is he's literally just ruined investor sentiment. He's ruined consumer sentiment. He's ruined relationships around the world. He's hit the trifecta. The asshole trifecta. I was going to tell you this guy's something else. And so, in the disruption of consumer and investor sentiment, what you have is you have the loss of one of the greatest drivers of economic growth in America, which is consumption. Consumer spending is the biggest driver of the economy. That's 70% of this economy is consumer spending because Americans are really, really big consumers. I don't encourage you to do that, but that's what Americans do. We just buy stuff. So consumer confidence is down, investor sentiment is down, CEOs are nervous, they don't know what to do, how to invest next. There's a research paper by Baker and Wergler in 2007, and what they found is that when sentiment gets really, really negative, they said that's what they call a contrarian signal. So sentiment's very negative. That said future returns are typically stronger after the sentiment collapses. So that what does that mean? That means that when we're at our lowest, you're literally preparing for a boom. You're literally based on the data in the past. You literally when you hit rock bottom in terms of sentiment, that's when you can expect over the next like 2, 3, 4, 5 years to see just a really powerful stock market. Now, is that going to apply in this case? Nobody knows. Every situation is different. The one of the biggest risks right now is that there was something that was passed in 1930 called the Hoots-Smalley Tariff Act, and that was considered to be responsible for causing the Great Depression. But there were also some Fed policy mistakes that contributed to the Great Depression as well. So if you want to know if there's a chance we could have a depression or a global depression or a global recession as a result of this, I think the answer is yes. But remember that it doesn't always mean that the stock market is going to keep going down. But I'm going to tell you this too, in terms of my personal opinion, and my prediction on Trump. For some reason in my gut, I have this feeling, I don't know where it's coming from, but I have this feeling this guy is not gonna finish his 4 years. I don't know why. I'm not saying I hope that something bad happens to him. I don't do that. I don't sit around wishing evil on people. But I feel like the energy is so big and ugly and cra things are so messed up that I feel like he's not gonna make it. Even if he's right, like even if this is good for America, which is quite debatable, I have this feeling this dude ain't. I'm like, he's gonna do this for 4 more years. Really, really? I can't see it. I can't see it. But you never know. You never know. I don't know. I don't know. But anyway, let me tell you some other areas if you want to park some money and kind of prepare for the comeback. That's what I'm doing. I'm preparing for the comeback. Yeah, just so many places. I mean, I really like, well, I like the tech stocks because I feel like they're being pushed down to reasonable multiples now. I don't think companies like Nvidia are the superstars of the tech space anymore. Nvidia's just kind of gotten ugly, the last few months or few weeks. But I do think that there are some opportunities out there. And in fact, one area where I think that over time there will be an opportunity is with China. I feel like China came in pretty gangster. China's just not a punk when it comes to economics. If you put tariffs on them and you say, well, don't retaliate because it'll only make it worse, China don't care. China will stand up to Trump. But at the same time, the Chinese are more rational and more reasonable than the Americans are. I think that China is a country that understands the importance of America as a trading partner, and it is my greatest hope and expectation that at some point the Chinese are going to establish some sort of connection and communication with the Trump administration that will allow them to continue some of these. Relationships that have been very profitable for them for many, many years. I think it's just a matter of seeking a realignment. I definitely think in Vietnam got hit with a 46% tariff, which made absolutely no sense. I think in Vietnam, I could see the Vietnamese also stepping up, kissing the ring, and working things out with the Americans. Now, do me a favor, guys. Let me ask you this real quick. Can y'all hear me? Okay. Let me know if you can hear me. I'm back off the microphone a little bit, so I just want to make sure my audio's coming through okay. All right. So, and by the way, if you do the morning class, Monday in the morning, just know that tomorrow I can't make it tomorrow. I hate canceling 2 days in a row. It makes me mad. But I'm doing a speech in Kentucky. So, but I'll be right back, guns blazing Sunday morning. So anyway, so what else? Let's talk about Tesla. Let's talk about Elon Musk and Tesla. And let me just tell you, I'm actually even though I know Musk is this politically controversial figure, I can't get past the fact that the dude actually kind of is a genius. And it's crazy that this man has lost $111 billion since the market crashed. And what's ridiculously insane is that he's still the richest man on earth. I don't know if you know that. He still literally is worth about $322 billion. So as much as people think he's going to go broke or he's going to end up on welfare or he's got too many babies mamas that are going to, eat him up with child support, he doesn't have those types of issues. This man being a billionaire makes you just see it almost seems like you're infinitely powerful financially. It's not infinite power, but it's just remarkable power. The fact that he has the wealth of over 300 billionaires is just kind of insane. And so here's the thing. Here's what is my truth and my belief about Tesla, assuming Elon Musk, doesn't slip in the shower and die or something. I think that this guy has a legitimate shot at being the first trillionaire. I really do. I think that his moves in SpaceX, I don't know if you've been paying close attention, but what he's doing in SpaceX is remarkable. If you recall, NASA gave Boeing more money than SpaceX, a lot more money, years ago. And literally SpaceX has has done more with the little bit of money that they got than Boeing did, which is kind of insane. It's kind of crazy that this company, this tiny little company that it was at the time, literally has done so many more launches than SpaceX. In fact, in 2014, check this out. This is how how smart. I'm not trying to put this guy on a pedestal, but literally NASA gave Boeing $4.2 billion for their Starliner spacecraft. SpaceX got 2.6 billion for the Crew Dragon. So basically, in terms of deliverables, SpaceX launched its first crewed mission in May 2020 and has completed a lot of different flights to the International Space Station. Boeing, literally, they had an uncrewed test flight in 2019 that had issues. They haven't been able to launch hardly anything. And basically, the Office of the Inspector General reported that Boeing's per seat cost for transporting astronauts is 60% higher than SpaceX. So Boeing Starliner hasn't conducted a single successful crewed mission, not one single successful crewed mission. In the meantime, SpaceX's Crew Dragon has become the primary vehicle for NASA to get people back and forth to space. So literally, they brought those astronauts home. And as much as however you feel about Musk politically, the man is figuring things out. He's doing things right. So here's if you are interested in any of that, if you hate him, then just it's okay. It's okay to hate him. There's a lot to hate. I get that. Um, I just don't take things as personal. I've never believed white people like me very much. So when you tell me a white guy's a racist, I just say, of course he is. He's white. But that's me being a cynic, right? I'm not saying all white people are racist. I'm just saying that there's just so many. I just forgot. I can't count them all. But what I will say is at the end of the day, if you have an interest in that particular sector, I think this summer is going to be really interesting for Tesla. It's going to be really interesting to see how those robo-taxi announcements go, whether the market is impressed with this or not, because that's where the scaling occurs. I think Musk has because he's weird. He's got probably Asperger's or something. He doesn't like people. A lot of these tech guys don't like people. So they have fully embraced AI. They've embraced robots. So their goal is, look, we don't really want to work with people anyway. So we want to have robots in our factories. We also want to have cars that drive themselves. So we don't have to worry about how much we're paying an Uber driver because robots don't demand pay. So it's very problematic, right? It's kind of a crazy future. It's uncertain. I'm sure it makes everybody nervous. I get it. I'm nervous too. But at the same time, I want you to be prepared. I don't want you to be sitting around just feeling sorry for yourself and just sitting around being mad at people. If they're making money, I want you making money too. So not telling you to buy Tesla stock. I do not do that. I do not give investing advice ever. But what I am saying is that I own some Tesla stock. I'm gonna buy some more Tesla stock and I'm gonna be ready. So when he makes that robo taxi announcement, if the market responds favorably, then Elon Musk will be smiling and I will be smiling too. But that don't mean we got to like each other if we both taking care of our family. So that's my position on Tesla. I think Tesla is one of the more interesting participants in all of this. And if you don't like Tesla, again, if you text the word money to 87948, there's a list of AI stocks that so you can really look at Microsoft, you can look at Apple, you can look at Nvidia. There's also, maybe the Broadcoms out there. Those are good. AMD, TSMC. So Tesla isn't the only game in town. So don't ever get overly obsessed with one individual stock. You always want to spread your money out. So just to give a quick summary in terms of what a complete shit show Trump created with the tariffs, at least right now. The S&P 500 is down about 14% from recent highs. The Nasdaq's down about 19% from recent highs. The 10-year Treasury yield is down, which means bonds are going up because people are running toward bonds. And there are bond funds out there that you can buy. I texted you all a list of different bond funds that I like. It's in what Dr. Boyce is buying. If you go to drboycestockmarket.com and log in and look at what Dr. Boyce is buying, you can find the bond funds. I sent that out to you guys last week. Also, what else is going on? And people are predicting a recession. So the big question mark now, the big thing that we're kind of wondering about and looking forward to is we're asking ourselves, what's Monday gonna look like? Monday's gonna be crazy, right? Just be ready. Like Monday is gonna be just, it's gonna be an explosion. Either something wonderful is going to happen Monday, most likely, or something terrible is going to happen. Right? It's either going to feel really, really good or really, really bad. So either you're gonna like wake up in the morning and hit a crack pipe and get the high of smoking crack, or you're gonna get shot in the stomach and bleed out on the sidewalk. It's gonna be one or the other. I cannot imagine Monday being chill at all. I think Monday is gonna be chaotic and ridiculous. So if you don't like the volatility, then maybe sitting on the sideline with a little bit of cash might be a good idea just to see if things go down again. I'm really curious to see if Monday is the day that we actually move into bear market territory. And this is something I don't think anybody knows because here's the thing that's the wild card is the fact that Donald Trump could literally say one thing this weekend. He could literally say, we're moving closer to a deal with China, and that can literally cause a massive market rally. Because if you look at what happened in terms of the market decline today, it was driven by China. It was all driven by China. The big question for today actually was how's China going to respond? Right? And China came back and said, "Man, screw you. Like we can put tariffs on you too." So that's what they did. So that caused the market to really crash today because they're like, "Oh crap, China's mad. Now China wants to fight." They punched America back. So if other countries get inspired by China, like of all the other countries say, yeah, we're going to rally together and we're going to go after this man who, in our mind, is the equivalent of an economic Adolf, right? They want to call him Adolf because he reminds you of the other guy from World War II. Then that could actually cause a further decline because that has actually been kind of a rallying point, or China could be the rallying cry for the rest of the world. But if they do make a little announcement and say, yeah, we talked to the European Union about reducing the tariffs. Vietnam, the tariffs are going to go down because they agreed to do whatever. If Trump can get his victories, this is the thing. A lot of it's about his ego. We know this. If he can get his little victories out of the way, then I think he's as eager to move us back to normalcy as anybody else. So when he gets his little victories, somebody gets on the phone and says, "Okay, we're going to invest $200 billion in America and create, 100,000 American jobs." It doesn't even have to be true. They just get up there. These people just like to talk. Then he can make the announcement, and then he can say, in exchange, we've decided to shift their tariffs. The other thing too that's really interesting that I heard is that Trump is actually invoking tariffs in the negotiation for TikTok. He's actually talking about TikTok as say like, okay, the sale of TikTok and persuading the Chinese government to agree to a sale of TikTok is one of the things that where tariffs is going to be used as a leveraging point in order to get that deal done. Is that good or bad? I don't know, but I do know that that's interesting, right? I do know that he has a significant interest in getting rid of TikTok. Or sorry, not getting rid of it. Sorry, making a deal with TikTok because he wants to get out there and brag about that because that's what he does. So if that's the case, then what's happening is maybe his back channel negotiations over the tariffs is actually occurring through his negotiation over TikTok. Maybe instead of talking to them directly about the tariffs, they're talking about TikTok, and maybe the conversation becomes simple. Hey, we'll reduce our tariff on you if you go ahead and sign this deal. So I don't think all these tariffs are going to stay at the level that they're at. They're definitely going to come down, most likely. All they need to do is kiss the ring or make or boost his ego, and next thing you know, he'll make the good announcement. You'll see the market move up. But the thing to remember too is that if you see the market take off, just know the next day it could crash again. So if you don't like the crashes, if the crashes bother you, then when the sun comes out, buy your umbrellas when the sun comes out. That's what I do. This is not investing advice, but what I do is when the sun comes out and it's a good day, I always remember that if it's a terrible day, this too shall pass. If it's a wonderful day, this too shall pass. So because I know that this too shall pass, I'm not dealing with the market that's in front of me. I'm dealing with the market that's going to be in front of me. I don't deal with what's happening right now. I look at what's going to be happening. Like Wayne Gretzky, the great hockey player, used to say, I don't go where the puck is located. I go where the puck is going to be. So as an investor, you want to go where the puck is going to be. If you do that, then good things can happen. All right. So anyway, what I want to do is share with you. Here's a link actually to those bond funds. If you want to go the safe route in your investing, which I think bonds are just a good thing to have in your portfolio anyway. Hit that link right there, and there's a list of bond funds that you can grab onto. And also, let's see, I see a question. Thank you, center of the board. Okay, you gave me $5. So you put your question next to the $5. So I guess I gotta answer it. So I'll answer your question. Are Leap option spreads useful for this market? Yeah, I bought some. Leap's long-term equity I always want to say anticipation securities. These are basically long-term options, calls or puts, or or stock replication strategy, stuff like that. Yeah, yeah. I bought one today, actually. I bought a couple today. Because when the market tends to dip like this, I'm looking upward. I'm like, oh, okay, well, let me position for the comeback. I don't know when the comeback's going to happen, though. That's the only big risk factor. But yeah, Leaps can be very beneficial. So yeah, if you want to join us in options class, we teach that every Thursday night in Coin, the Certified Options Investing Network. So if you want to join our next cohort for Coin, I think you'll like it. Feel free to go to drboycecoin.com, drboycecoin.com. All right, guys. All right, so somebody says he's on the autism spectrum. Am I on the autism spectrum? Are you talking about me? My wife said I might be. I hope that hurts my feelings a little bit. But then again, that's okay though. I probably am, so it is what it is. And if I kind of have like an Asperger's thing, I probably wouldn't even care about that because I guess maybe you don't care what people think, or maybe you do. I don't know. I'm stereotyping, so I should probably shut up. Okay, all right. So anyway, I'm gonna get out of here, guys. It was great talking to you. Thank you for hanging out with me. And don't forget, if you want to take a look at the training, how to make money without working, text the word money to the number 87948. Text money to your on your phone to 87948, and you can join our morning class. You go to drboyceelevate.com. You can check out the class there. I want to ask y'all a quick question really quick. We ran these TV ads in Atlanta and Chicago, I think, and in a couple other cities. Did anybody see those ads? If I see like more than like a few yeses, then that's going to really tell me that I might have done something right. I heard a couple of the students saw the ads. Did y'all see the ads? Give me a quick yes if you saw the ads. That way, that'll kind of help me. And as we do that, I'll mention this as well. If you go to drboycebooks.com, my wife has books on there as well, and I have some my book, The Ten Commandments of Black Economic Power, is there, and also our flashcards and stuff like that. Adrena says he's talking about Elon Musk. Yeah, Elon's definitely on the spectrum. Elon is he's special. I'll just say that special in a multitude of ways, good and bad. So, what do y'all think? Did anybody see it? Give me a. I'm looking for a yes. I don't see any. Kim says nope. Jermaine says where? I think it was Atlanta, Chicago, and a few other cities. Dwayne says yes. Okay. Errol says, oh, Miami. Yeah, we're gonna be in Miami. So if you want to join us at the Economic Elevation Summit in Miami, Errol's gonna be a speaker there. Errol's a great guy, a good brother. If you go to economicelevationsummit.com, you can join us in Miami. That's May 9th and 10th. Economicelevationsummit.com. I saw it in Southern Indiana. Okay. So a couple of y'all saw it. Okay. Yeah, anyway, I'll ask you guys about that later. So anyway, have a good night. And okay, I'm seeing a lot of no's. Man, okay, now my feelings are hurt. All right, so it was on TV actually, like Tubi and stuff, but I don't even watch Tubi. So all right, guys, well, have a good day. God bless you, and I'll keep you guys posted on everything. So if I see anything interesting happen in this market, I'll hit you up maybe via text or via email or something like that. So have a good day, everybody. God bless you. Take care. Bye.